Hang Seng trading with gains of 0.5%. The Taiwanese index, though, is the outperformer, trading with gains of almost 2.5%.
इंश्योरेंस रेगुलेटर से भी उनको रेगुलेटर का गाइडेंस मिलना है.
Industry demands that imposition of safeguard duty and the time period should be 4 years.
First, it was the biggest single-day drop that the stock saw in the last 6 months.
The market continues to open in the green. It's a good 0.7% higher for the sensex and the nifty.
I would think that consumption should slowly inch up. There's not going to be a quick rebound.
We do high mix, low volume, complex assemblies in our factory. So that goes into aerospace and other sectors.
PCI has now given a complete nod for Ultratech to go ahead and take over the assets of India Cement.
We had a gap up opening in sync with the rest of the Asian market.
Nuclear energy is considered as clean technology as it produces nearly zero carbon dioxide.
Day where you started the day off with strong gains. We've cooled off a little bit.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Surbhi Upadhyay. Well, after 5 days of losses, today at least there is green on the screen. So it's a good day. Benchmark indices are up close to about 0.6%. But the disappointing bit is that from the highs that we were at 11:30 roughly, we slipped quite a bit, though in the last 10 minutes there is an attempt at recovery.
Absolutely. So let's see what the last 1 hour brings. Was European markets, when they opened out, they had a tinge of red on them. So we've kind of taken our cue there. Asia had a good session, actually. We are the weakest market by that stretch. I mean, 0.5% gain. Asia did better than us, but Europe is in the red. So by that comparison, we're not that bad off. And today you really have, two large factors to thank. One is obviously banks, and the bank nifty is doing really well. It's retaining a lot of that gain that it's seen today, a gain of 1% on the bank nifty. Those are, of course, the Asian markets that I was alluding to. There we go. So it hasn't seen any sort of volatility or choppiness, at least as of now. The other piece is Reliance. Remember the positive call from Morgan Stanley that we had, Jonathan Garner giving a very optimistic view on the stock in 2025. That, I think, the street has taken note of, and Reliance today is a key pillar of support. There's some buying, across consumer names like Trent. Some of the metal names are doing better on the fact that the dollar internationally has cooled off. Those are the key sort of buy areas for the market. But Reema, I think the market will be concerned with the fact that mid-caps, remember the mid-cap market started cracking on Friday. And today, the gain is not that much. The mid-cap cool-off is more apparent. I mean, you had a couple of pointers in the red as well on the mid-cap screen. So let's see what the last hour brings.
Indeed, let's find out a few trading strategies then to navigate through the last hour of trade. Mitesh is now with us for a few closing strategies. Mitesh, what are your thoughts of the day so far? And how does it set us up for the last hour and tomorrow?
Yeah. So, I think the market with bounce back, which happened, I think still that process is going on. And we had a high of around 868, 65, and then from there we declined nearly 200 points. But then we started climbing. So I think this is like, a situation when the market is signaling start of some kind of a sideways activity. The declining trend or the declining move seems to have halted at least, though I don't have a sign of reversal as yet. So 23,860 and 23,660 is my boundaries. I think we might see 2-3 days of choppy consolidation leading into the expiry between this range. So, the idea is that now people should especially traders should take a fresh look at their strategy and positions and, change the position accordingly. I think a good way to trade this could be to try and buy near 23,700 with a 50-60 point kind of a stop loss and try to book anything closer to 23,850.
And your trading ideas, any stock specific action?
Yeah, I have a buy on ITC. It's just on the verge of giving a reversal or a breakout sign. So waiting for the stock to get past 475. Buy about that with a stop at 468. Look for 490, maybe, about 495 as some kind of a target area in the short term. And I have a sell on JSW Energy with a stop at about 670 for targets of around 630.
Okay, all right, got that. Mitesh, thanks very much. We'll come back to you for some more trading ideas as we go forward. Let's go across and look at now the big story of the day. And that really is the rise that we're seeing in steel stocks. So twin factors at play. One, like I mentioned, the fact that the dollar internationally has cooled off after the PCE inflation numbers in the US. But the second local factor that's keeping stocks really excited is the fact that there is some hope building that the DGTR, which has now started an investigation into so-called dumping of steel products, maybe that investigation will lead to some sort of protectionist duties. So let's, in fact, go across to Sudarshan, our colleague who's been tracking the story, specifically JSPL. JSPL is also in focus because there's an antique note on this one. Sudarshan, what is the note saying?
So talking specifically about JSPL, which is amongst the top gainers amongst steel stocks, it's up almost 3%. And Antique has today come out with a note saying it has a buy call with a target of rupees 1183 per share, implying an upside of nearly 30% from current levels. So the first reason that Antique has given on the healthy capex plans, it says capex plans could receive a major boost for JSPL as it has a capex plan of rupees 31,000 crore through FY27. Company is looking to commission a slew of projects over next couple of quarters. It will be setting up world's largest single location steel making complex by 2030, and also it will enhance crude steel making capacity to 15.9 MTPA and finished steel capacity to 13.90 MTPA. Also, there are some of the major positive internals as well. First, domestic long prices are at a premium to flat HRC. Value-added proportion in Q2 FY25 was at 53% against 47% that company had reported in Q2 FY24. Net debt to EBITDA is at comfortable level. Currently, it's at 1.2 times against company's targeted net debt to EBITDA of 1.5 times. That's also it's at comfortable level. Second, higher capacity utilization of pellet plant. Also, Antique believes it will aid volume growth in the medium term. So considering all these factors, Antique has a buy call with a target of rupees 1183 per share.
Thank you very much for that. Gurmeet Chadha is now joining in, managing partner, CIO, Complete Circle. Gurmeet, hope you had a good weekend. Are you around for the last 2 weeks, or are you taking off?
No, pretty much around. Typically, I do Amritsar during year-end. So plan to do that, report to the headquarters and back for the new year.
Never miss a day of making money, right? But what about metal stocks? There is some protectionist measures that are being talked about. If it comes through, will it be material? And plus, last week there was news about how Karnataka might increase the duty on iron ore. And if that comes through, it would be a bit of a blow.
Oh, yes, and you got to be tactical here, Rima, and I think the trigger are always Chinese-led stimulus. In general, when you have geopolitical issues around the world, commodities are a good hedge. They are a hedge against inflation. They are a hedge against some bit of volatility. But the kind of tariffs and issues around it, you have to be a little careful. We have a special situation. It's called Mukand in the portfolio. That's more a turnaround story with Bajaj now having 74% stakes. They are into both specialized steels and alloy steels. And we're looking at some value-added products where, the steel drums are getting replaced, in level 2 in the industry. So something like, for example, Time Technoplast, not exactly related, but they have come up with a replacement of steel drums with IBC, which is, intermediate bulk containers. They have the ability to reduce storage by around 75%. They're already the leader in, plastic drums, almost with 50-60% share. And now they're getting into a lot of value-added products, which is like, your compressed gas systems, CNG cylinders, lithium battery, the packaging around it. So we are looking at level 2, opportunities here. And commodities is tactical. So we'll play non-ferrous to Hindalco and Tata Steel and Mukand as and when, there is a tactical opportunity.
Okay. Got that. So that's the call on some of the steel names. Gurmeet, hi, season's greetings to you. I wanted to just, go back to some of these names like Amber and even PG Electroplast. There's a big flare in the stocks today. Amber is up some 12-13%. I'm not sure if there's something new that the street is smelling or if this is just, buyers piling into the EMS trade. What's your sense, and which of the names do you like at these prices?
The entire Subi space has been on a tear, whether it is B2C or B2B. So we have in our portfolio Dixon, which has done extremely well. We have been adding it, on dips, on whenever we have had a sizable correction. We have Keynes, which is again smart meters, more for smart meters in the portfolio. We are looking at a few names more in this space, but it's just that the valuations are something you can't take your eyes off. So we are also looking at some names on electronic assemblies. You mentioned PG in the portfolio. So our stance is that this is a huge opportunity. Maybe a lot of good news is in the price. It's like what defense names had, about a year back. They were discounting orders for next 5 years, 10 years. So Page, for example, if you like, has just moved from 5 to 7,000. I think in a matter of a few weeks. So you have to be a little careful in terms of what you pay for here. Otherwise, you could have a similar situation what happened with defense names for, let's say, last 6 months being negative and subdued. So we are more a buyer on dips. We are also looking at DCX systems, in terms of adding to the portfolio. But as I said, incrementally, we'll be happy if we get them maybe 10-20% cheaper.
Okay, that's on some of these defense names. What about staffing companies like a Quest Corp or Team Lease? Generally, there's so much bullishness that India needs staffing companies. There is underpenetration of the formalized economy. Plus, there is increased need because of the gig economy workers, the manufacturing, capex push, etc. Between Quest and Team Lease, do you have a preference? And Team Lease has made this acquisition, which goes deeper into HR tech. Have you had a look at that?
So, we were with Info Edge largely because of Naukri, and, obviously we expected some turnaround in both education and the matrimony vertical. Plus, it gave you a play on the startup ecosystem, which was through Zomato and Policy Bazaars of the world. But our exposure is pretty less in Info Edge. So, this particular space, as I said, it's nothing which is structural. It's very cyclical. It goes down and up. So IT, for example, had a bit of an issue some time back. Now, obviously, that's becoming a bit of a tailwind. Wage inflation is no longer there. So we have Info Edge in the portfolio, but the weightage, would be sub 2%.
And would you look to increase your weightage in, Info Edge as the year progresses next year, or look to add a Team Lease or a Quest?
So we are actually more keen on, looking at the broader retail consumption play. I think this is where I think you will see a lot of fiscal action also leading up to the budget. Consumption has slowed down. Rural already was soft. Urban has shown some signs of turnaround. So we are trying to look at new avenues of, retail consumption. So one of them is an airport play. Airport has become more an hub of consumption and retail. They are, away from the cities, and there's a different level of consumption happening there. We're looking at some of the airline names. We are looking at some of the new age companies, which is like the Zomatos of the world. So we are trying to now play consumption through, retail through a slightly different way. Leasing and staffing is something model I don't understand. And, I'm still that textbook, free cash flow, ROI basis. And it's very difficult to value these business on using traditional DCF models.
Okay, so I'm just going back to that point. Gurmeet, you said that you are looking to play consumption through some of the new age names. You mentioned Zomato. It's made its entry into the sensex, right? What a journey it's been from being an unprofitable company to being almost hated on the street and now to being celebrated and loved. It's been quite a ride. So what's the thesis? Do you like Zomato equally? Some argue that it has, more of a discount, so probably a better bet. And expand on that point of playing consumption, because it's very grey. I mean, there is a talk of slowdown in urban, rural is expected to pick up. So what all are you looking at in consumption?
Zomato obviously is one, both through the food delivery as well as the quick commerce play. We think that's going to become very big. Swiggy's done a lot of catch-up. We were lucky to do a lot of pre-IPO for some of our clients. So we played both actually there. As I said, we're looking at some of the airport plays, we're evaluating GMR. If that's a new way, the airport model is changing. We are looking at Interglobe, it's been a great season. The wedding season overseas gaining market share now, 63% market share. All operating metrics now stacking up. Fuel prices have been pretty stable. We are playing the hotel name. We have Indian hotels in the portfolio. We are now looking to add little more between SAMI, which is the second largest hotel chain now, and now available at about 8-9 times EV to EBITDA, much cheaper than some of the listed names. Maybe we are also evaluating whether to add more to Lemon Tree also. And now we are also trying to play, the home consumption theme. So we have something like a Stovecraft in the portfolio, which is a leader in kitchen appliances and cookware. So they were already approved with Walmart. IKEA also has approved them, and they are really gaining market share in non-stick and a lot of cookware and kitchen appliances. And it's a bit of a woman consumption play as well. A lot of focus in rural areas on women, with all the government schemes now focus, whether it is Lakpati and largely Behna and all of those names. So as I said, it's multi-layered, and you got to be selective in terms of what you want to play.
In the airport plays, it's GMR, Interglobe Aviation, even Dream Folks. Have you analyzed it, or that doesn't come in the airport plays?
No, we are evaluating GMR. We are looking at Interglobe. Interglobe, we are in fact increasing exposure now. We believe that how the industry is consolidated, largely two players now, and something which has happened in telecom will happen to aviation, and listed player technically is one. So that's the scarcity premium you will also get in terms of playing Interglobe. It hasn't done anything for a while. There were promoter issues. Large block came from Gangwal. Then there were few soft quarters from Indigo. I think it's looking good now.
No, and Dream Folks, the one which provides lounge access, etc., to at airports, that's not a stock of interest.
No, it's just that you can't buy everything. In a portfolio you can have 25-30 stocks. So it's about relative opportunity. So maybe at a slightly lower price. I'm not averse to looking at Dream Folks as well.
And PVR has had a rough year, 18% lower year to date 2024. Do you think 2025 will be kinder? We will be back in the theatres and PVR stock will rebound?
No, I hope so. What's happened is the occupancy level, if you see, Rima, was 27%. Now, anything below 34-35%, if you see, you can't make money in this business. The rentals are high. Secondly, the F&B revenue, which really contributed to the margin, courtesy this occupancy being low, dipped. Advertisement revenue anyways is facing challenge. But I agree, this is actually cheaper than before the merger, if you ask me. And if you calculate current market cap of PVR, you're actually, getting it at kind of a 2 crore per screen, which is even below the replacement cost if somebody was to just replicate this. But, you need a better quarter. You need some of the operating metrics to improve for you to get more constructive on this. Similarly, some of the media names, including Z, etc. The valuations are very cheap. It's just that, you want one good quarter, and I'm happy buying them 10% higher, but you want to see some improvement before you want to, take a deep plunge here.
Gurmeet, just hang on. We do want to take an overall market view with you as well. But since you were talking about Interglobe and you seem to be quite convinced about the story, I thought we'll also talk about a note that Elara has written today. And Elara is actually sharing Gurmeet's optimism on Interglobe Aviation. Stocks up about 1.5%. Vinny is joining in with details of this note. Vinny, so what is Elara's thesis?
Yes, so surely we're seeing Interglobe Aviation that is in focus today after this double upgrade that's coming from Elara. Now, the stock is upgraded to buy from a previous sell rating. Target price is increased to 5,309 rupees. They've also raised the EPS targets for FY 27, 25, 26 and 27. So keeping an eye on that as well. Now, tailwinds, they believe that the demand is going to be strengthening. They expect a 12% CAGR growth over FY 25 to FY 28 for the industry. That will be something that is supporting the growth, and demand will be supported by new airports that are expected in Delhi as well as Mumbai in April 2025 and onwards. So that will increase the volumes and traffic in terms of that. Other than that, Interglobe Aviation will also see Pratt & Whitney aircrafts that will be coming into operation again. So that is a positive. Terminal expansions in major cities over FY 27 and 28 is a key factor. And lastly, the shift from railway traffic to air traffic is a key factor that will be supporting the growth for the industry as well as Interglobe Aviation.
Okay, all right, Vinay, thank you very much for that. So that's Interglobe Aviation, a stock that Gurmeet also likes. Gurmeet, before we let you go today, what about the market as a whole? There are lots of clouds on the horizon when you talk to people from, weak earnings growth to God knows what's happening with tariffs, so on and so forth. And then this big supply of paper, all the blocks, all the IPOs. But, all things put together, if you look into the crystal ball, what do you see ahead in 2025?
So, I think near term, you got to be mindful of bond yields and dollar index. I mean, if it surges, whatever good internals you may have, markets will test you in terms of flows. I also think FI flows, from a pure selling perspective, a lot of it has happened. But, I think the problem is more internal now. I think what has now happened is our internals have weakened. Look at our GDP numbers, our macro indicators. I think there is some slowdown. The earnings were hardly anything to talk about in H1. I don't see earnings being, more than high single digit this year on a best case. Now you're trading 21 times. So I think we're probably missing a trick here. I think we need a bit of a fiscal and monetary push to, get the consumption back. The government has to spend more, so the capex has to pick up. It has to pick up by 60% if they have to match 11 lakh crores. And you got to be more selective now. This is a year which will, you have to go level 2, level 3 on your research. We've had 2, 3 easy years of money. Even this volatility, if you see, 1 year return of mid cap index is 27%. Small cap is 25%. Nifty is about 13, 14%. So this is despite the volatility. So my sense is going to be tougher next year in money making. So you need to probably moderate there. I think one thing is that the valuations in a lot of pockets are now becoming more sane. And that's when you got to be a little, slightly counter-cyclical. That's why I said consumption, don't write consumption off in India. You can never write it off. Once things slightly improve, a lot of these stocks may come back. So start being a little counter-cyclical, little bit of consumptions, little bit of banks, things which haven't done too well. And look at what is new India doing. I think the Nifty doesn't reflect the new India today. So the way we are consuming online, the way we are making digital payments, the way we are, our travel budgets are going up, our digital budgets are going up. So you got to go level 2, level 3, build those kind of themes in the portfolio and play this.
Okay, time to go contra and find out what, the way we've all changed, our habits have changed, and how it's impacting businesses and which businesses benefit from it. Gurmeet, great chat as always. Thank you for joining in. Hope to see you once more before the year closes out. We'll slip into a break. On the other side, we'll invite Nikhil Ranka from Nuvama Asset Management on the other side.
Welcome back. You're with us on Closing Bell. We have Nikhil Ranka of Nuvama Asset Management now joining in to give us his sneak peek into 2025 and what the market may have in store. Nikhil, good to have you on. Thanks for joining in. So it's been a tough Q2 the last couple of months, right? We've got so much of negative news flow from earnings to GDP slowdown to, government capex not as strong as one would have hoped for, at least in the first half. But now as you look at 2025, let's start with the headline call first. Range bound, maybe some more downside, or will the market surprise us all and take off?
Well, good afternoon, Surbi and Rima, and thanks for having me on the show. So the last time also I was there on the show, we were at close to 23,500 levels. We were positive on markets from those levels. The markets rallied almost to 24,800, and then we've seen this fresh round of selling from FIs. Post the guidance from Fed of only 2 rate cuts in 2025. Now, if you look at sort of last quarter or the quarter which is going on, you have to see we've seen the largest selling by FIs in a single quarter that has happened in the history of Indian capital markets. We had in excess of $20 billion of selling. We had record primary market issuance. We had close to $3 billion of issuance in the month of December itself. And to top it, we have one of the slowest earnings growth that we have seen in the last 10-12 quarters. But if you look at it, my sense is the commentary should turn substantially better as we head into Q3 or the new year in that sense. We should see the earnings for Q4 should be substantially better because December, the festive season has been good for a lot of companies. In terms of FI flows, with the $20 billion of selling that we have seen, the sort of overweight of India in the MSCI emerging market would have come down substantially. And therefore, the incremental selling that we will see from FI should be far lower as we head into the next quarter. And therefore, our view is this range of 23,300 to 23,500 should prove to be a very good support for the markets. And we should head on an upward trajectory from here on. My view is we should be closer to 25,000 levels closer to March, April.
Nikhil, hi. Afternoon. This is Rima here. In terms of constructing portfolio, is it time to look at some contra bets, stocks and sectors which haven't performed in 2024, like specialty chemicals or metals have been fairly beaten down? Is it time to look at any? Would you have any contra bets or consumption, for instance?
So Rima, I would say that steel can have a very good tactical rally over the next 2-3 months. As you have been also highlighting, the DGTR has recommended investigation into dumping of steel. And the expectation is that there could be a 10 to 15% anti-dumping duty that could come for flat products, and participants have recommended a period of 4 years. Now, if you look at HRC prices, they are at closer to 50 to 53,000 rupees. And even if there's a 10% sort of anti-dumping duty that comes through, then obviously there can be a 4,000-5,000 rupees of steel price uptake. And that should provide a floor to the profitability of steel players for the next couple of years. So both earnings as well as multiples can see some sort of re-rating for the steel sector. Consumption, I would say we are playing more rather than consumption, because the commentary has been a bit subdued from a lot of FMCG guys. And therefore, we are more tactically positive on OMCs and aviation. If you look at the OMC space, as compared to the last quarter, refining margins have increased to $3. Crude has come down $12-13 as compared to the last quarter. And therefore, the gross marketing margins on both petrol and diesel are now close to 9 rupees. And if in the supplementary grant, we do get some compensation for the LPG losses, which OMCs have suffered in Q1 and Q2, then going ahead, Q3 and Q4 can be very bumper for OMCs. So aviation and OMCs are the two sectors which we feel should do very well going forward.
Okay, OMCs and aviation, these are some of the areas you're liking. Also, in terms of market cap based selection, while the narrative has been by large caps, a lot of mutual fund managers have been saying that there's more valuation comfort there. But this FPI selling is really hurting the large cap space. So overall speaking, I mean, would you have greater propensity to go beyond the Nifty 50? Or are you looking to still pick up these, large cap bargains, which have fallen quite a bit?
So, Surbi, if you look at the premium of the mid-cap index to Nifty 50, that is now at almost close to 30%. And this has been amongst the highest that we have seen in the last 5-8 years in that sense. Now, the point is, because we have seen so much of selling from FIs concentrated in one particular quarter, and most of their holdings have been on the large cap side, we have seen large cap bearing the brunt of the current fall that we have seen. And therefore, in terms of risk reward, clearly we feel that large caps are a much better place to be in right now as compared to mid caps. However, in mid caps, you have to be very, very selective. Select stories where you will see 30-35% earnings CAGR in mid caps, and where there is a strong business moat will continue to do very well. But there are some pockets of fraud that have developed on the mid cap side. And therefore, one has to be very cautious on those stocks and sectors where you see, it's very difficult to meet earnings expectations that have got built into the mid-cap space.
Okay. Any other sectors? You mentioned aviation, you mentioned oil and gas. What about financials? What are you buying there?
So financials clearly have got into the value zone now. So MFI, if you look at it, Q3 should mark the peak for the stress that we see in the MFI book. The commentary from most of the sort of companies that we have spoken to does indicate to us that Q3 will be far worse as compared to Q2. But that should also mark the peak of the stress for these players. And a lot of stocks there are now available at less than 1 times price to book. So if somebody has a 9 to 12 month view, because stocks may not do anything in the next 3 to 6 months over there, but obviously markets will start pricing in the recovery 3 to 6 months ahead. And therefore, somebody with a 12-month horizon should start looking at some of the MFI picks. Even large cap banks, if you look at it, valuations have now been below one standard deviation below their historical levels. And therefore, even there, my sense is we should start to see some sort of uptick. On the cautiousness, I would say auto is something that you will have to watch out for, because if we have a 3,000-4,000 uptick in steel prices, then clearly margins will take a hit for auto guys, because demand has not been very strong post the festive season in autos. And it will be difficult for companies to pass on the entire 4,000-5,000 rupees of price hike that will come through in terms of commodity prices. And therefore, there could be some sort of margin pressure that we will see in the coming quarters on the auto sector.
And a quick word on IT. Q3 could be on the softer side, but thereafter Q4 onwards, or do you think 2025 we will see a very good recovery? Because IT has been subdued in terms of pure fundamentals in numbers.
So, Rima, if you look at it, Q3 and Q4 typically are soft quarters for IT because we see a lot of furloughs in this quarter. And at least for the larger guys, our expectation is the CC dollar growth should be in the range of 0 to 1%. For some of the mid-cap companies, it could be closer to 3-4%. But in general, if you look at valuations, a lot of IT stocks, large cap IT names used to trade between 18 to 23 times 1 year forward earnings. And today that number is almost close to 26, 27 times. Those sector is therefore at a 10 to 15% premium as compared to historical averages. And till the time we do not see traction in order bookings or revenue growth, I would say IT will more be a range-bound trade that we will see, because we've not seen significant deal wins getting announced from the large guys in the IT space. So the view is that IT will be a bit range-bound for the time being. And then as we get clarity on FY26 for most of the companies, that is when probably we will start to see the next leg of up move in IT companies.
Nikhil, thank you very much for joining us this Monday afternoon. Need to get into a break. As always, on the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls from our technical experts. Welcome back. It's time now for D Street Chatter. Nimesh is now joining in to get us an insight into what dealing rooms are saying. Nimesh, pretty good day so far.
Absolutely, Riman. A good day for the markets, and again, it looks good because of the oversold levels what we saw last week. So, kind of a pullback rally from extremely oversold levels. But if you look at today's market, we've given up some gains from the highs. So there is a bit of selling as well at higher levels. That's the overall feedback. From a flow perspective, it's 1:1. So again, equal buy and sell from large institutions. In fact, this is going to only go down or slow down in the days to come. So obviously, towards the year end. From a sector point of view, banks have done well today, and within that, the private banks have done well, and a bit of buying is seen in the PSU names as well. So a lot of PSU stocks have also seen a bit of a pullback from the recent oversold level. So those are the sectors to watch out for. Technically now, 23,350 turns out to be a very big support on the downside, and now the previous support of 24,350 will act as a very strong resistance. So the Nifty seems to be is likely to be in the range of 1,000 points, at least in the near term. That's overall feedback. But again, today, while we've seen a smart recovery, it's only because we were extremely oversold after the selling last week.
And what about stocks?
Well, some individual names are buzzing in trade today. So the first stock is Intellect Design. Big move on that name. The stock is up 12%. Volumes are on the higher side. Some bit of flows as well from larger HNIs is what I understand. But remember, I guess the street got excited post the analyst meet on Friday, where they spoke extensively about their new AI platform. So that's keeping the stock exciting. So that's the first name. The second stock is Healthcare Global. Well, the stock is down in today's trade, down 6%. But in general, in the last 1 month or so, it's been in a consolidation phase. I understand there's going to be a large block deal in Healthcare Global very soon. More than 10% equity is likely to change hands there. So that's something to track there. And the last is Manappuram Finance. Again, a big move on that name. In the last couple of weeks, he's seen a bit recovery in that name as well. In fact, for the last couple of days, while the stock has been in and out of the FNO ban, there is derivative-based buying happening from larger FIIs, and the street is anticipating some corporate development very soon in Manappuram Finance.
Okay, all right. Nimesh got that. By the way, there's that flash at the bottom of our screen. So Feb 1st, it was always anticipated that it'll be a trading day because we have the budget presentation. But we're just trying to understand the details of it, whether it's the equity segment that's going to be open till 5 o'clock, which would be a little surprising, or whether it is perhaps the currency market that is open till 5 o'clock. We are just going to get some clarity and get back to that. Actually, if I look at the release that has come in from the NSE, it says normal market open timing 9 hours, normal market close timing 1700 hours. So it doesn't talk about the segment, but we're getting more clarity on this, whether this is applicable to equities or to other asset classes. But yeah, it's going to be a working Saturday on the 1st of February. That much we know for sure. Okay, so that's the street chatter and the update on the budget day timings. Our next guest is with us now, Sudeep Bandyopadhyay. Oh, okay, before we get to Sudeep, actually, let's ask Mitesh for some trades as well. Mitesh, so it's held actually quite okay in steadies today so far. Final ideas, index, stocks, anything?
So we'll take some calls on the stock side. For me, Nykaa is breaking below its swing low, so that's an STVT with a stop at 162. Look for a target of around 157 or thereabouts. And Piramal Enterprises is our support area, so we'll just suggest a buy with a stop below today's low of 1077. So keep a stop at 1075. Look for 1110 as the target in the pullback.
Okay. Thanks, Mitesh, so much for that. Okay, now we're getting the clarification there that for equities, it's regular trading hours, so 9 o'clock with the pre-open and going all the way up to 3:30. I think 5 o'clock is the time for commodities on the NSE. So that's what we know as of now for that 1st of February, Saturday trading session that's going to take place. Sudeep Bandyopadhyay with us from IndiTrade Capital. Sudeep, hi, good to have you on. So Saturday trade, it's all getting exciting, right? So many events lined up in the new year. We'll look at Trump taking office and we need to know then what happens with tariffs. Then we walk into the budget. First thoughts, 2025, what's in store?
Well, it's going to be an exciting year, as you are rightly pointing out. 20th January, Mr. Trump takes over, and he has promised to immediately bring in the new tariff regime. So there will be a lot of volatility in the market. Of course, we have the 1st February budget. And again, remember, this is going to be the first full budget of the new government, and probably this is the best time to do some concrete, solid reforms. So I'm sure there will be a lot of expectations around game-changing reforms as far as this budget is concerned. And if it's not done now, then when? Because this is the first opportunity, and the elections are far away. So yes, we'll have to look forward to that. On top of that, I will also add the entire interest rate scenario globally, whether it's in India, whether the RBI will cut, not cut post the budget, because February monetary policy will be just after the budget. We'll also have to see what the US Fed does. And to my mind, the biggest and the most interesting will be the Japanese central bank. They are expected to increase interest rates. They are holding, but at some point of time, I believe that they have to increase interest rates, and that will lead to, again, a round of carry trade unwinding, which will destabilize markets. So I expect a lot of volatility during the first quarter of the next calendar year, which is the last quarter of current fiscal. We have to expect volatility. But one more thing I will point out here is that I do expect recovery in consumption, and the corporate performance should improve in Q4. So that is something to look forward to. Inflation numbers also can come under further control, which will enable RBI to look at rate cuts seriously. So yeah, there are silver linings, but volatility is going to be the order of the day.
So would you lighten your positions considering the volatility in the first month, and there are so many news pieces? And how would you build your position in the consumption sector? What are the stocks that you would buy?
Not really, Rima. In fact, I've been recommending investors to look at, biting into stocks in a small manner. There has been some sharp correction, on the back of significant FII unwinding during the last 3-4 months. It's been a historic unwinding. Corporate performance hasn't been good. So a lot of stocks have corrected 20, 30, 40% from their peaks. And some good stocks also have corrected, probably for no reason of their own. So investors who wanted to buy shares for their building long-term portfolio, this is a great time to start buying. Don't put all the money together, but start buying. That's what my advice has been. And I will continue to maintain that advice in Q4 of current fiscal as well. As far as consumption is concerned, I do believe that consumption will start recovering. And look, India is a country with 140 crore population. You can't go wrong if you bet on consumption and good quality stocks which are in this space. So whether it's an FMCG, whether it's consumer durable, whether it's two-wheelers, whether it's automobiles, if you have a long-term view, take the opportunity of the correction and buy into these stocks. That would be my view.
Okay, so that's on the consumer piece. On metals, Sudeep, there's a lot of chatter, right, that this safeguard duty will come in and maybe it should help some of the steel players. Would you look at a short-term trade here, if not a slightly more longer-term fundamental call?
Well, definitely there is reason for a short-term trade. The safeguard duty, I think, is a real need. And most probably the different government departments, whether it's the finance or it's post the investigation, of course, finance and commerce, they look at it favorably. So yes, it's going to come. That's what our view is. Whether it will be for a 4-year period or shorter, one has to see. So yeah, there is a short-term trade possible. Things have already started moving based on the duty coming. So I'm not sure how much juice is still left in that short-term trade. But yeah, it can be looked at. We do like Tata Steel at current levels, and one can look at. Overall metals, we have been liking Vedanta for quite some time, and we continue to like Vedanta. Apart from the entire metal story and their presence across the metal spectrum, we believe that the corporate restructuring which they are undergoing now is going to happen sooner than later, and that could lead to some amount of further value unlocking. That's what we believe.
But there's a quick word on, since you like Vedanta and you track it so closely, they've scrapped the plan to demerge the base metals business. They're going to keep it under the parent business. How does this affect shareholders?
Well, it does affect in a way. Look, I think the game plan is to bring in shareholders, relevant shareholders in all the demerged companies. Now, the base metal they want to keep in the main company or the holding company, not the holding company really, the main company which they have listed today. Under that, they want to keep the base metals so that they can probably get investors in that company accordingly. I think that's the game plan, and that's why the change is. But I don't think too much is going to change based on that. Yeah, a little bit of volatility, a little bit of uncertainty, but fundamentally we like Vedanta, and we believe there is a lot of juice left in the company, and post demerger there will be further value unlocking. That's our belief.
Okay, all right, Sudeep, got that. Stay on. We do need to take a quick break, but we'll come back with more questions in just a bit. As we take the break, here's some good news for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app from the Apple Store or Google Play. Welcome back. It's looking good on the Nifty, 1,177 points higher. So the gains are intact with about 7 minutes to go. By the way, look at some stocks surging now in the mid-cap market. Just want to point out some names. Mankind, massive move on the stock, almost 8% now on Mankind Pharma. There's also Kaplan Point that's on the move. And look at what has happened to Intellect Design Arena. Intellect has just taken off completely. There's a 20% surge on Intellect today. We have to, of course, keep the caveat in mind that in general, volumes might not be the biggest on these stocks. But anyway, the moves are absolutely staggering. Well, more on them in just a bit. But let's actually get you the outlook for 2025 from the group at Macquarie. How will the market fare? what are the growth headwinds and what are the key stocks and sectors to look out for. We caught up with Aditya Suresh as well as Sandeep Bhatia. Take a look.
We're far more optimistic on telecom and IT compared to the benchmark. We're a bit more optimistic on healthcare as a space. We end up being neutral on financials. We end up being meaningfully negative on consumer, right? That's kind of a key underweight here for us. Industrials is about kind of in line. So that's kind of the broad kind of flavor of kind of how we're positioned. We still think that the first half government capex kind of slowdown was more a blip. So we're still behind the theme in full. But I think it's more that bottom-up list again is more in terms of what's already in expectations and where there is a bit of upside in the multiple. L&T does feature in that list of kind of or within our top, say, 15 odd stocks in there. And that's more, but the proxy again is more about the confidence of the theme than it being about earnings being revised upward.
What can turn the tide is that if India manages the Trump presidency well. India is one of the few countries which, besides the US and China, is entirely domestic driven. But for the first time, I would say, the way the world is positioned, the US is actually pivoting in a major way. If the US pivots away from being the consumer of the last resort, then there is growth challenge for rest of the world, and including India, especially where we are most exposed to, which is in IT services. H-1B visas could be something which the US government can take up. So all these issues, if Trump comes down with a sledgehammer on tariffs or on some policies which make it difficult for our businesses to operate, there could be a correction in the market. There would eventually be a reset and Indian companies will come out stronger and better, but there would be definitely an impact on the markets.
Okay, that's the view coming in from the top team at Macquarie. We're still in conversation with Sudeep Bandopadhyay of IndiTrade Capital. Sudeep, you want to come in on Intellect Design Arena? What's happening? 20% up move. Nimesh was telling us they spoke to a few analysts, got the street excited. Is Intellect Design Arena a stock that you've looked at and tracked?
In fact, the analyst call was pretty interesting. The emphasis on AI and AI-related developments got the street excited. We know AI is the word which gets pretty much everybody worked up nowadays. So I think it's a reaction to that. Of course, the volumes are not that, I think, great. But yes, I think the analyst call did the trick. I won't recommend buying in post this sharp rally of about 17.5–18%, which it did today. But it's a space worth watching. And if and when there are a little bit of correction or the counter cools down, one can look at it from a 12-month plus perspective.
That's on Intellect Design Arena, one of the big movers of the day. Sterling and Wilson, they won a large order of 1,200 crore rupees. And even in Q2, I mean, generally the order wins have been quite strong for Sterling and Wilson. The stock is up 5.5% today. Do you like Sterling and Wilson?
Overall, in fact, the construction infrastructure, this space looks very interesting with the kind of government spending which is happening already and private sector capex also picking up. I think the prospect for pretty much all these companies in construction infrastructure and related segments are pretty bright. So yes, Sterling and Wilson looks good. Of course, they have cleaned up quite a bit of their balance sheet. And the debt has become manageable. So things are improving definitely at Sterling and Wilson. And this counter can be looked at for taking exposure. Of course, whenever we looked at this entire space, the big daddy Larsen & Toubro always looms large. And from an investor's point of view, the first port of call should be Larsen & Toubro.
Any other ideas?
Well, I think, I do like this Vatik Wabak. You know what happened when they lost that Saudi order of 2,700 crore. It does have a short-term impact, but I think it gave the investors an opportunity to pick up the stock at a slightly lower valuation from a long-term perspective. I think it is the company of the future. With the kind of expansion, with the kind of product range, with the kind of effective way in which they've been managing the book, it's definitely worth picking up at these reduced levels. Short term may not be great, but medium to long term looks fantastic.
Okay, all right, Sudeep. We will wind it up on that note then for now. Thank you very much for being with us. We'll, of course, discuss some more ideas with you in just a bit on Markets Forward. But for now, let's start winding down what has been a reasonably good session for the bulls, who were slammed very hard last week. So this week, to start off with Monday, we've got a 170 point tally on the Nifty, and fairly broad-based: consumer, steel, metals, and a bit of oil and gas as well. So JSW Steel up about 2%, ITC up 2%, Hindalco 2%, ONGC and Reliance have had a good session, about 1.5% on both of those stocks. Trent was another solid name from the consumer pack, throw in a Titan as well over there. And then let's not forget the banks, because the Bank Nifty has actually outperformed the Nifty today with a gain of over 1%. So ICICI Bank, HDFC Bank, SBI, all the big boys doing really well, gains between 1 and 2%. Where we did see some profit taking on the large cap screen was the auto pack, Hero, Moto, Maruti. They were slightly downbeat. Some selling on Bajaj Finserv and HDFC Life. By the way, insurers, even beyond the Nifty, like ICICI, Prudential, Lombard, Max, all these names, New India Assurance, all these names were down because the GST changes on insurance, both life and health, they have been deferred.
Despite it being a good day, at least on the frontline indices, the advanced decline ratio closed well in favor of the number of stocks declining. So we had about 1,000 stocks advancing for 1,500 stocks in the red. So that's disappointing. The mid-cap index managed to close up in the green, but there were moments through the trade where the mid-cap index was dipping into the red. Small-cap index closed in the red. That was down 0.25%. That's the Nifty small-cap index. The BSE small-cap index was down nearly 0.6%. So 3/4 of a percentage point gone on the small-cap index. Some of the big, notable movers, at least on the mid-cap end of trade. Well, you had MobiKwik, that did pretty well. HCC was under pressure. Zomato was weak. So was Swiggy, Ola Electric, all of them declining in trade. On the way up, we spoke about MobiKwik, but Intellect, Design Arena, the two cement names, India Cement and Star Cement. India Cement, of course, has got the CCI approval for its merger with Ultratech Cement. Then you had a sale, and the entire metal basket up and about in trade. And some PSU banks like Bank of Baroda, Union Bank managed a positive close. Well, with that, it's a wrap on Closing Bell. Thank you for watching, but don't go anywhere. On the other side, we'll prep you up for tomorrow with Markets Forward.